What is Fed and what is its purpose? The Federal Reserve System, Fed, is the central bank of the United States that regulates the country's monetary policy, supervises and regulates banks, and maintains the stability of the financial system. What is the history and mission of the Fed? The Fed was created in 1913 in response to financial panics and bank failures in the late 19th and early 20th centuries. Its mission is to promote maximum employment, stable prices, and moderate long-term interest rates in the U.S. economy. Can you explain how the Fed is governed and by whom? The Fed is governed by a Board of Governors, which is composed of 7 members appointed by the President and confirmed by the Senate, and 12 regional Federal Reserve banks, each with its own Board of Directors. How does the Fed's process of setting interest rates work? The Fed sets the federal funds rate, which is the interest rate at which banks lend reserve balances to each other overnight. This rate influences other interest rates in the economy, such as mortgage rates and credit card rates. What is the Fed's impact on the economy and how does it work? The Fed's monetary policy affects the economy by influencing the availability and cost of credit, which in turn affects spending, investment, and employment. It works by adjusting the federal funds rate and implementing other policies to achieve its dual mandate of price stability and maximum employment. How does Fed's monetary policy work? The Fed's monetary policy involves using various tools, such as open market operations, reserve requirements, and discount rates, to adjust the supply of money and credit in the economy, with the goal of achieving its policy objectives. What tools does the Fed use to fight inflation? The Fed uses various tools to fight inflation, such as raising interest rates, reducing the money supply, and using forward guidance to signal its policy intentions to the public. What actions does the Fed take during times of crisis? During times of crisis, the Fed may implement emergency measures such as providing liquidity to financial institutions, purchasing assets to stabilize markets, and lowering interest rates to stimulate borrowing and spending. What is the Fed's global impact on the economy? The Fed's monetary policy decisions can have significant effects on global financial markets and the global economy, as the U.S. dollar is a major currency used for trade and investment around the world. What is the relationship between the Fed and other central banks? The Fed has relationships with other central banks around the world, including through its membership in the Bank for International Settlements and its participation in international forums on monetary policy and financial regulation.